See you, Scott.
Why was it weaker than it looked?
Well, two reasons. First of all, if you look at the household survey, which actually covers a lot more people, it's not considered as accurate. We're actually down in the number of jobs over the last 3 months, not up like the payroll survey. But just as importantly, and I listened to a lot of newscasts, and I think a lot of people are ignoring a tremendous drop in the number of hours worked per week. Now, when you might not think 0.1 drop, and they revised the previous month down 1/10 is a lot. But if you do the math, 1/10 drop in the work week is like a $450,000 person loss in payrolls. And in fact, we've seen one of the biggest downdrafts in hours worked over the last 15 years since going back to the financial crisis back in 2008.
Okay.
So even though the headline number looked, decent and beat the estimate, what I saw underneath there, I think showed a lot of weakness.
So this to me sounds like you think it only bolsters your case. The argument you've been making is that we're already in a recession, that we just don't know it.
I think we're in a recession. I mean, even some of the weighted data and inventories maybe down 2% in the last quarter. We already got minus 1.6 in the first quarter. So that technical definition has been reached of a recession. I think the Fed will go 75. I mean, listen, one has to remember, everyone's talking about the Wednesday number, and inflation is important, but it is very backward looking. I mean, that's when gas prices, it's going to be for the middle of June, when gas prices were at the all-time high. Now, we've already known they've gone down 20, 25, 30 cents. Actually, the wholesale price has gone down 60 to 70 cents. A lot of forward-looking data that we've been getting just over the last 2 or 3 weeks has been very much on the downside. This June number that we're going to be getting on Wednesday is not what I call, really on the ball current inflation. It'll be a bad number. I mean, it probably will be very close to 9% on a year-over-year basis. And everyone can rattle their drums and say, yeah, Fed's got to go at least 75, et cetera, and so on. But you got to be looking at the tea leaves and looking forward. That's not as comforting as, to keep on hiking rigorously.
So, but again, and to remind people, you're somebody who was arguing and advocating for 100 basis points.
Go real fast. I wanted them to go to 100, 200 basis point at the beginning of the year and get there. We all know they should have started in 2021. Everyone knows that. I mean, it was a terrible policy mistake. Do we want to? I don't want them to make the policies mistake on the way going down. I don't think 75 will, but I think if you're just wedded to these historical numbers, listen, we've talked about, Scott, how much the housing market, which we know is softening on current prices because of the way they collect data, is going to show housing inflation over the next 6, 12, maybe 18 months into the official CPI. So, don't get fixated on CPI as being the current, be-all and end-all of where inflation is going. I hope the Fed recognizes that, realizes that we take a look at freight rates, we look at commodity prices, we look at home prices. We're really seeing some declines here. And again, as I've talked about starting a month ago, I think with you, the money supply has barely grown this year. And that is also a concern in terms of, are you going to slow too fast?
Okay.